Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, August 11th. So, theme of the day, I would say, reversal day for S&P. Right, we try to go higher in the morning. We were up, about a 0.5%, and then sold off through the session. So that is a reversal day. And I believe we'll look at a couple charts, but I believe that's a bearish engulfing for the S&P. So is this the end of the world or end of the bull market now that we've had one down day? I don't think so. I think that, I'll give you my take of the market right now. And this has kind of been showing itself, even though the S&P has been outperforming and we've been seeing this reversal from, going out of growth and into value, this can typically hurt the overall market a bit. So let me just talk about that value, the rotation, because of course this word rotation at this point is totally, gotten played out. And so we'll see how much longer this lasts. But my analysis shows that out of the last 4 of the 5 years, we've seen value outperform growth in the month of August. And September month. It does. It's not perfect, but sometime around August or September. I talked a little bit about this on Bloomberg TV earlier. If you heard me around like 3 o'clock today, I was on earlier. But so this kind of is the playbook. Again, it's four out of the last 5 years, so it's not 100% of the time. But value does pick up a bit around August, and this year we've got something a little bit different where growth names have really outperformed. And, it's a little, I would say it's a little bit dangerous how much growth has outperformed because as some of these longs that are in, some of these names have been very overcrowded longs because everybody's wanted to be in them, while this COVID crisis has been going on. So, and that could take a little bit of time to unwind a bit to get those trades not as crowded as they were. So, the other thing that we know while this happens around August and September, August is typically. I know this is not this doesn't always happen in an election year, but the seasonality, which I'm not a big seasonality person, but like I take things where I think where they're useful to me. So even though like I don't look at like every single month and know whether or not it's a strong month or weak month, I know that August is kind of a weak month. So um, when you look at what we've had so far this year, we've been pretty blessed, right, with overall this price action and August itself. If you look at look at this particular column, the percent change, right, over the last 7 days. So this is the first red day in 7 days. So just put that in perspective when in your trading and so forth. I know that we kind of lose a little bit of muscle memory when we, only see the market go up and it becomes quite comfortable. One of the words that I talked about at the end of last week was complacency. We tend to kind of get into a little bit of a very complacent um, area for us, and it becomes a little bit difficult. And it's something that I've been saying that hey, eventually we're going to get a little bit of a market dip, and maybe it won't be one that you buy on the first day or the second day. Maybe you let it breathe a little bit. And again, keep in mind in August that it's the weakest month of the year. Be patient, right? Let it play out a little bit. We talked a lot about that in yesterday's video, as well as we did we did a webinar for members after the close yesterday. And the word that I kept on using, because I was getting all these requests for all these growth names, which, by the way, all look pretty darn similar, which should tell you, number one, that there's some profit taking in this group if they all look so similar. And number two, they closed on the lows yesterday. And that's the main questions that I'm getting in terms of chart requests. What about Shopify? What about Fastly? What about this? If you're only looking at these names and they're coming down, you got to give it a little bit of a break. They're probably, once as they come down, and again, this is all my opinion. I'm not giving out any advice or recommendations or anything like that, but this is all my opinion, is once groups have gone up so far and so fast, they got to come back in a little bit just to kind of find their support. right? And also flush out the weak hands that are in there and get some of the overcrowdedness out of these trades. And then they'll come back and we'll see where buyers want to scoop them back up again. Because again, it's not that I don't like growth names. They've just gotten way over the tips of their skis. And I think if you look at some of these charts and zoom out a little bit, you're going to say, oh, geez, wow, this thing has gone up 200% this year. This other name has gone up 300%. That's not normal. So let them come in a little bit. And again, and so I literally said this in last night's webinar. If you're a member and you're watching this and you didn't get a chance to watch that, I just said, hey, here's another one, CrowdStrike. Here's another one, Twilio. Give these things a chance, be a little bit patient. And I know that we've been so complacent to buy any little dip the last couple months, but this is not always how the market is supposed to function. So here's what the S&P chart looks like. So we did, try to go higher for the day, or if you want to look at SPY, it'll probably look a little bit worse because it doesn't look that damaging to me on S&P futures because it's a continuous market. But yes, that's a bearish engulfing. And SPY, we talked about this last VPOC being taken out, and probably we were due for a little bit of a check back. So yeah, I think a check back to the 20-day moving average, like if you just put these things in perspective a little bit, is not all that bad. You just have to be a little bit careful about how you're adding risk, right? And I'm doing that in different places. Like I added a Disney trade today, I added a Visa trade today. I'll go through all my trades as always, but just you're going to, like, every once in a while have a little bit of a loss on a trade. It's not the end of the world. Just make sure that you're sizing your trades appropriately. The Qs, I think, are kind of interesting here because, we've now seen this underperformance now for a couple. Here, let's bring this up. So if we look at SPY performance, and if we look at, if we look at Qs performance and see how many days this has trailed. All right, so we got basically since last Thursday. Sorry, this window isn't perfect the same size. Let's see if that makes there we go. That's a little bit better. But since last Thursday was the last day that this Qs outperformed, as they have been doing most of the year. So we've got one day where they trailed, definitely on Friday, definitely yesterday, and then today's the third day in a row. So again, a little bit of air coming out of the balloon, right? That, and I kind of think of it, that's probably a decent analogy. Think of a balloon getting pumped up, pumped up, pumped up, pumped up, and it's so full of air. And now, there's a little bit of a prick in the bubble, and some of the air is starting to come out a little bit. Again, I think quite normal. So all we have right now is a check back to the 20-day moving average. If you've heard me in these recent videos, I've basically said that, hey, that would be an interesting spot to see where things kind of line up. Now, does that mean I want to just go in and buy the Qs today? No, I want to look for a little bit of confirmation, and that's basically what I said. Trying to answer some of your questions about, like, the 15 different growth stocks everybody keeps asking me about. Let them breathe a little bit, like fine wine. That's another analogy I'm throwing out for you. But I'll look at a couple of these. But as I said yesterday, when something closes on the lows, as most of these growth names did yesterday, and they close there again today, it tells me that the selling may not be done yet. Right? We want to see buyers come in, and we want to see hammer charts, right? And so a couple of these things. So here's what I said a little bit earlier in the day, just to kind of give you perspective that this is all not hindsight 2020 stuff. But I said back here earlier in the day, I said, so this is about 12 o'clock, and this is when growth names were starting to bounce a little bit. I said, so major question for me, are these growth names, after that little bounce that we got, in the morning, going to get a footing, or are we going to go a little bit further south? And I said, it will be good watching versus trading, and then happy, to add a trade if I do get a signal. But not going to take anything unless unless I get the signal, right? And that would be like a nice hammer bar. And I'll kind of give you an idea of what I'm looking for here. I'll spend a couple minutes. And then I said, at 240, I said Captain Obvious over here. The last hour will be important for tech and growth. Yesterday, most names closed on the lows in the space and started. So this is the kind of things that, like, by the way, if you're not a member of Tribeca Trade Group, this is the kind of things that I try to like give you some direction. Again, I'm not giving you advice or anything like that. I'm just kind of telling you, like, hey, pump the brakes a little bit and don't look to buy every single bounce just because you see a little bit of red on the screen, right? This kind of thing comes with a little bit of experience. I've been doing this for a long time to kind of let these things breathe a little bit. And the other thing is just to slow down a little bit, rather than like, oh, you got to buy this name or you got to buy that name because it's down. Just let this, let's see where the chips lie a little bit, right? And this should be like a plan already in your head, and that's kind of why I try to spell it out a little bit and say, I don't know. And the other thing is, right? Oh, people are always looking for somebody who thinks they know. I don't know, right? And I think you'll find the most honest people on Wall Street will tell you the same thing. Nobody knows what's going to happen. So you rely on the price action, and then you make some judgments and some conclusions based on what the price action is telling you, right? So let me tell you that again. Nobody knows, nobody has a crystal ball and is going to be able to tell you. It's all about risk management and looking for, in my opinion, a little bit of confirmation that the big boys and girls, the institutions, are coming back in, right? I'm sorry, like, I have nothing against the Robin Hooders, right? I think it's great that the small retail traders are involved in this market again, but they don't push the market, right? Maybe in like the penny stocks, right? Because they're probably the biggest participants in some of the penny stocks, or like your Kodak and things like that. But they're not going to be, it's going to be the big institutions who are going to drive the price action, not the algos, right? Everybody always wants to blame things on, oh, it's the algos. It's the algos. No, it's whether or not the institutions are buying and selling, right? There will be the high frequency guys who will front run the big guys, right? They will try to get ahead of the orders and sell in front of them. And same thing on the upside. They will try to get in front of the buy orders and basically, front run a little bit. But there's nobody with magic algos, or people like to blame the market makers. If this is one of your thoughts, then you probably want to do a little bit more, have a little bit more understanding of how the market works. It's really whether or not the big institutions, what they're doing, if they're buying or selling, unwinding or adding into positions. So just to go through like a couple names, and I'll give you the one name that I traded today, which gave me a false signal, and that's going to happen from time to time. So Coupa Software, right? It's been one of my favorite names within the group. It's one of the names that I look to buy on a dip. It gave this false signal on the 5-minute bar. It started to move out of range a little bit, stalled, and I got stopped out of it here, right? And here's my trade blotter for the day, just again, so that you can see what I'm up to here. I went long this Coupa Software in stock because I didn't like the options at 288. That was around 1220, right? So right in here. And then once it went south and broke value for the day, I exited at 118. So right in here, like this first red bar is what I noticed. And then of course it came back a little bit. But do you see what I mean? Like, this is not a big deal. Like, this is a small loser. A paper cut. Right? So you live to fight another day. And that's how, like, in this market right now, I think everybody should have, again, this is not advice, but if you want to kind of, be able to trade this market pretty well, doing things like that, taking a small stop, trying a trade. Again, there's nothing wrong with trying a trade, but realizing where your stop price is right away, right? So if we go down the list, right? And I'll just kind of show you why today wasn't convincing. And what I normally do is I put together a couple different time frames. So first of all, this Shopify is one that has broken the value area pretty decently. It's also got a ways to go before it hits this 20-day moving average, right? So it's kind of, as I like to say, a little bit in no man's land, right? It did not. It did get into inside value, but really what I'm looking for is to see like a nice reversal where you can get through this value area, and then you can use the top of value as your support. So this was a pretty weak bounce, right, in Shopify. And if you go through some other names, what's the other one that everybody always asks me about that I played for a move into earnings? But you could see this Fastly rally didn't even get to the bottom of value. So that's a very weak bounce and finished down 4% for the day. And if you look at the 1 hour, this thing failed, right? This is a name that we went over in yesterday's webinar, but this thing failed and is now trying to figure out where it's, whether or not it's going to keep going down. And you got a VPOC down here at 50, all the way down here at 58. Could it get down to 58? Well, first thing, this Fastly it's got a VPOC down here at 64. But my point is it's nobody knows, right, where this thing is going to go down to. It's at the 50-day moving average, and I think, and this is we talked about this name, by the way, in pre-market. It's got to get back inside value, which is basically back above 76. So if I see something kind of convincing here, I'll give Fastly a shot. And there was a little bit of that small momentum call buying in the middle of the day in Fastly. Here, I'll show you. But again, we know how that works with the call buyers, right? Most of the time they're wrong. Well, sorry, I shouldn't say most of the time, but a lot of times they're wrong, right? They were buying calls up until about 11 o'clock this morning. Again, small stuff. I call these nibbles, right? But you could see I'm not distinguishing between calls and puts. They were buying a little bit of stuff, so somebody was giving it a shot today as well for a turnaround day in this. So yeah, it's a name that I'm watching, but a name I'm not going to buy yet. Because I'm not trading like this name on a longer term horizon. I'm trading it for like a short term swing if I were to be taking a position in it, right? And I want to see the 50-day moving average hold, because if it can't hold here, I would say next level down is 64. So if you're looking to short, this may set up to be a short down to 64 bucks. But it's at a pivotal area right now, and that's one of the names I think we'll be talking about tomorrow morning, is Fastly and whether or not this thing can hold the bottom of value. But literally, there's a lot of charts that look like this. Twilio is a little bit different. This is in value, right? So it's no longer in breakout territory. It's now in the range. And if you look at this thing, it looks a little sick on the 1 hour too. It's below value. So again, the other thing is when I'm looking to take a shot at one of these things, I want a level to trade against. I got nothing to trade against here. We're below value, and there's a VPOC down here. It's in no man's land. Right? On the 5-minute, it gave it a shot to break value, and it couldn't do it. I traded a little bit of Facebook today, but I'm very fast with this stuff. I was just looking for a move through value on the 5-minute, and that's it. And I got that. So here's my trade in Facebook, right? I got in Facebook at, here it is, right? 1028. So I'm lining this up for you here. Oh, sorry. 1028 is the second bar inside value, right? And then I took targets off and I got out of the last piece. Where's my exit in Facebook? Right at 1104. So right here. So I got my move and I exited at the top of value, and that was the right place to do it. Right. And again, that's a little bit of like, it's luck to get that move all the way through to the top of value, and then look what it did thereafter. Right. So know what you're like. If you're in it for a scalp, make sure that you've got a predetermined level. And that was it. And that's the last time I traded that. Other trades, I was heavy into more value names, a lot of industrial names. I got out of those names. I did take the CVS trade. So might as well go through a couple names that I'm in to give you some perspective. I didn't stop myself out of this trade. I basically just put a starter on pre-market, and then we got an ugly looking candle. The stop for this trade will be 64. I think I may have put that on the trade, on the ticket. Yeah, stop 64. So it did not hit my stop, but that's an ugly looking candle. Starbucks, I got out of the options. So this is another way that you can kind of balance, right? Some traders are just fixated, they're just trading options for some reason. Other traders are just trading stock. Why not use all the tools that are ample to you? Starbucks was a trade that we got into yesterday, and I took my option position off this morning, and I wanted to see, hey, Starbucks has a chance to basically stay above the 200-day moving average. So out of the Starbucks for 245, paid 130. And then I went back. So if you look to see what I did here in Starbucks, I decided to put it on stock versus the 200-day moving average, which it's just above. So again, tomorrow, if this breaks my stop of 78, I'm out, right? And again, out with another paper cut, right? Not remember, very important, we don't want big losers. Little tiny losers, do they stink? Yes. But it's not going to blow up my account. That's the whole thing. I think traders get themselves in a predicament when there's a tiny bit of volatility on the tape, and they're so committed to their ideas that the market could only go up, they get themselves into trouble. All right, so try to be as unemotional about this stuff as possible. I took my second target in CSX today. By the way, the UNP would have worked better. I chose CSX because the options are a little bit easier. I wanted to play this via options. Let's see what CSX looks like. So I got the last piece of this on. So, by the way, I hope this helps you. This kind of, as you guys are watching this, I go through real examples. I don't go through hypothetical nonsense that some of these other guys who put out these videos, right? Who like, oh yeah, I got out of it here and whatever. I'm giving you the timestamps on all this stuff so that you can kind of match up, and you could see like basically how trading works, right? Sometimes it works great. Sometimes you have days like this. It's gonna happen. So CSX, kind of what is this? Shooting star candle. Remember, one day is not a pattern. You need 3 days. So I could be out of this trade if it reverts tomorrow. But again, that's why you take targets. So I took target 2, and I got the last piece in November calls on for this one. SE, I took a target. Let's see where this one. Right, this was a trade that I talked about buying the dip yesterday. However, it continued to slide, and it gave back the gain. So here's another one, right, to look at. High growth, unfortunately rejected here this morning, at around 130 on the 1 hour. So this is a problem one too, right? We don't know where this one's going to go down, and it didn't hold support at the end of the day. Now, I have to realize that if this thing starts to go down, if it if it starts to have another red day tomorrow, I don't want to hold it to the next support level, which is down to 110, right? So that's too much. That's a bigger loss, right? So I've got to be mindful of that. Yeah. Let me see. Is there anything here on the 5-minute? So again, this one might be another one that I have to get out of, right? 110, right? So there's good support. There's support on the 5-minute, and there's support on the daily, right? So first level, again, one bearish engulfing, right? Because this completely took out this candle. Another nasty. So 3 nasty days I thought was worthy of a shot. Now you got 4 nasty days. What's to say it can't have another big down day all the way down to 110? And again, if it gets down there and if it takes out that VPOC, that may be a better trade entry, right? Again, I'll say it again. We don't know what's going to happen. We just have some levels to trade against. And I would be watching this 119 level for a break. If it breaks there, I would have to kind of say goodbye to this trade for tomorrow. Or maybe I'll have a little bit of a tolerance down to 1, maybe down to this candle. And then that's it. What else? I got out of my XLI trade. I rolled that trade yesterday. Remember, I was in short-term calls. I rolled it out a little bit. XLI worked beautifully. Disney is a new trade that I put on today. I did take a target in this, and I added to it a little bit at the end of the day. I think Disney, I like the little consolidation up here after a strong earnings report. Again, looks a little bit different than the overall market. So, yes, somebody asked me, will this move a little bit with the overall market? Absolutely. And then we've got this one. This is another trade that I added today. This is just sometimes how they work, guys. That's pretty darn near close to taking out that VPOC, and it's a pretty decent rejection. This is a trade that I talked about. By the way, all kinds of call buying in this. How come it didn't work? Because call buying is only for momentum for the majority of the times. Sorry to break this to you. If you think call activity is like the magic indicator, go back and look at all the trades that are talked about. There's 50% of them work, 50% of them don't work. Probably a little bit worse than that because options are a harder game than stock. But I'll tell you, if you go through them, right, what happens is, again, I'm not going to dwell on this, but let's say you have these so-called, like, they're option jockeys, right? So they'll talk about 10 trades, and then what they'll do is they'll retweet the 2 or 3 or maybe even 4 if they're lucky, those ones that work, and then they'll ignore the other 6. Never happened, right? They won't talk about them again, but they'll retweet over and over and over those 2 or 3 ones that worked. Now, that's if you're okay with that, but that's basically what they're doing, and it's just something that's kind of a scam that's been going on for years, but that's what these guys like to do. What else? So yeah, so I'm in December calls for Visa. I'll have to see. There's no sell signal, but there's no buy signal because it didn't close, and that's just part of the luck of the draw with how things close at the end of the day. All right, guys, so that's it. So I think, like overall, again, I'm going over all my trades, and notice that I exited, a good portion of them this morning. And, we'll continue to kind of, like, I get trapped in things too. But overall, I want to let these things, if I didn't say it enough, give them some time and be patient. And don't feel rushed that you have to buy the dip because you think you're going to miss this dip. You know, the longer that you've been trading and working through these little dips that this is so far, this one in the Qs, which has been weaker. This is a normal dip. This isn't anything. This is no technical break or any of that. Will I be watching for more, a bigger technical break? Sure. I will, and that's something that we have to make some more adjustments and reduce our, how many positions I'm holding in my trading account. But we don't have that yet. I do think, I'll say this, my last conclusion is that these value rotations, again, because growth is such a bigger segment of the market than value, you can see some volatility with that. And I'll give you an example of what I mean here. If we look at the constituents, right, and if there's a rotation into financials, notice, for example, that the financials are only 10% of the S&P. So they don't really have that much impact on the S&P. On the other hand, if there's a big rotation out of tech and out of healthcare and out of consumer discretionary is only 11%. But you see what I'm getting at here is that these things are going to push the market. A rotation out of tech is going to move the market more than a rotation into financials because of the small weight. All right, I'll leave it there for the night, guys. Longer than usual video, but I hope this helps. Let me know if it does. I'm here and that's kind of why I run Tribeca Trade Group, is because I do like to help. Of course, my goal is to make money and provide good trade setups for people, but I'm here to help. So I hope this video. That said, I hope this video helps, and you guys have a great night. Thanks.